So hello everyone on the crypto channel number 1, where we covering up all the greatest and biggest, most resonant news about crypto world, about Bitcoin. So today it's a part 2 of the news. So today we're gonna talking about Binance Smart Chain beats Ethereum by some metrics sent to latest game finance craze. Also, we're gonna talking about why US government yanked BitGo's and BitGo lost crypto custody marshals on courage. Also, we're gonna talking about the biggest challenge for crypto exchanges is the world price fragmentation. So watch it to the end because it's really interesting. And also drop like button. Thank you so much. So crypto has been looking for a mass market use case. Andrew Zhu, an executive at quantitative trading firm Efficient Frontier, told CoinDesk, gaming is a sector that people have been hyping up for a long time. This is the first area of crypto where the average Joe without a huge understanding of crypto or blockchain can participate. Indeed, Axie Infinity, the popular crypto gaming platform on Ethereum, has generated more than $120 million revenue in the past 30 days, making it the top revenue generator among all decentralized finance protocols and blockchains, Ethereum included, according to data from Token Terminal. So we can see that actually it has more revenue than Ethereum, and this is huge. Here we have Polygon and PancakeSwap, but X Infinity is the biggest of in Axie Infinity also demonstrates a working use case for blockchain-based games, which paves the way for new entrants into the space. Justin Barlow, a research analyst at digital asset data analysis firm that I said, with Axie's success, it's likely we see major gaming conglomerates like Activision Blizzard or Electronic Arts entering the space in the coming years, bringing blockchain gaming to the masses. So, with Guild Games token sale netting 12.5 million in 30 seconds, it shows that market participants will not hesitate to switch from one hot toy to another, no different to yield farming craze earlier in the year. Denis Minkuro, head of research at Synergy Capital, told CoinDesk, adding that the market is still too nascent to make any conclusions. So it's really interesting. We can see that new biggest project can be the result in revenue. Ethereum, the second cryptocurrency. So this is huge. It proves for us another that one more time that it's all developing and infrastructure is rising. So it's pretty exciting. Let me know what you're thinking. So why US government yanked BitGo's contract and gave it to Anchorage? BitHorse hard-won deal to be the custodian of cryptocurrency said by the United States government was a victim of the company's own success. The $4.5 million 6-year contract with the United States Marshal Service, which CoinDesk revealed in April, fell through late last week. Anchorage, a smaller competitor, secured an even larger USMC's contract, $6.6 million, that expires after 5 years. So, 15 companies pitched USMS beginning in June 2020, public records show. Some were excluded from consideration, the government says being too big for a small business contract is the most common reason, but BitGo and Encourage both survived the ghoul. BitGo signed the contract on April 21. CoinDesk broke the news the next day, and BitGo trumpeted the victory the day after that. So, speaking about Locker and Glory, we see this as a validation of BitGo's service. One company exec wrote it in the April press release. 3 months later, Encourage declared more or less the same. So, we're busy with the business, said Galaxy Deputy CEO, and the last thing I need to do is continue this fight. So, I think it's pretty much exciting, because here we can get the conclusions of stories like that. So let's go on. So it says the biggest challenge for crypto exchanges is global price fragmentation. For decentralized market to scale globally, the interoperability between cryptocurrency exchanges must be seamless. So, commoditization and price. Commodities are goods that are fungible. In other words, the market treats goods in their various appearances as effectively equal. When a good or service is commoditized, there is no further differentiation between sellers, and all negotiation is based exclusively on price. So, discussion about trading fees is rooted in a belief that the price of cryptocurrencies is static across all exchanges, a commodity. If Bitcoin were a true commodity, trading fees would be the only issue at play, and the discussion around Coinbase's fee structure would be valid. So, market fragmentation occurs when contact and interaction between exchanges are poor. This results in differences in pricing between exchanges and a dearth of liquidity in the market at large. When these price variances are large, they rapidly subsume any variance in fees between exchanges. Investors and traders have been trained to only see the price on a single exchange, but this fragmentation means that the true price of any cryptocurrency is its price on a single exchange plus the fees on that exchange, compared with the same calculation on another exchange. So, speaking about market stabilization, it's actually interesting because we may see in what exchange the most great price for us. So this type of market house is not new, not isolated to the cryptocurrency market. The same issues have occurred in bonds and equities markets, but have been solved over time through regulation. For example, the United States Securities and Exchange Commission has a policy named National Bets Bid and Offer. This regulation requires all brokers to execute traders at the best available ask price nationally when an investor wants to buy a security, and the best available bid price nationally when an investor wants to sell. In this way, the regulation stabilizes the market and protects consumers from overpaying on any given exchange. Brokers are held in check and market forces work cooperatively rather than unilaterally. So the problem with implementation of the system in the cryptocurrency market are manifold. Lack of communication, restrictive regulatory compliance, and rare liquidity pools holding back any meaningful change. So guys, part 2 already on the video. Click on your screen right now to see it. So thank you so much to watch to this moment. Also drop a like button, hit subscribe and bell, share with your friends. Thank you so much. Also, as always, let's discuss anything in the comment section. I will be happy to hear you. And have a nice day. See you in the next video.